Hi ladies and gentlemen, this is Bud Gregg and I'm coming to you today from San Diego, California, where we're spending a few days just having a blast, loving it here. I'm going to do a few videos about the tax benefits for home-based business entrepreneurs, and I think you'll find this very valuable. This will be the first video in the series, and I'm going to name this video Stop Giving Your Money to Uncle Sam and Aunt IRiS. In fact, the premise of this video is about absolutely maximizing, legally and ethically, the benefits that the United States government has created for us, the home business owners. This will be the first video in a series dedicated to the home business entrepreneurs and the tax benefits that they can take advantage of, even if it's just part-time. All right. From the get-go, to kind of put this into perspective, if you're self-employed currently and you paid any federal income taxes last year, then you really need this advice. If you're a W-2 employee that owns a home, then you really need this advice. Now, if you're a W-2 employee and are currently renting your home, then you really need this advice. And I'm about to explain why. I am of the opinion that everybody needs to have a home-based business. But if you fall into one of the categories I just mentioned, you can't afford not to be in a home-based business. And this is why. Number one tax break that you get, and it's potentially your biggest benefit for the government, it is your car. You would have never guessed, right? Commuting to your W-2 job is not tax deductible. However, commuting from one job to another is. So, if you have a home-based business and you wake up in the morning and you send some emails, check your voicemail, make a to-do list for that business, then you hop in your car and commute 20 miles to your W-2 job, then you can write off 48.5 cents per mile. Okay? And this can really add up. In other words, if you commute 40 miles a day, you work 5 days a week, 50 weeks a year, it equates to almost a $5,000 tax deduction just for commuting only. Okay, so that right there is incredibly powerful. Now, there is a little record keeping that goes along with this, and stay focused because this is really hard. Just kidding. There's 4 things you need to write down for a 90-day period when you're getting your car: the date, where you're going, and whether it's business or personal, and the odometer reading. Do that for 90 days. Then the IRS lets you take those 90 days, calculate what percentage of the logged miles are for business, let's say 75%. Then you multiply the number by 4, 1 year, and that would be the dollar figure for the write-off, okay, for your commuting. Now, as far as driving anywhere else, meaning not commuting, let's say you're driving another 10,000 miles per year and say 75% of those miles are tax deductible. That equates to about another $4,000 in tax benefits, give or take. Now, a key point to make here is if you're going grocery shopping or doing mundane errands like getting gas or dry cleaners, go to places that have a community bulletin board that you can put your business card up on or replenish some flyers. Okay, that makes that mileage tax deductible as well. So certainly keep that in mind. So, your automobile, as you can see with the example I've given above, is almost about an $8,000 tax write-off right from the get-go for just driving your car. Now, of course, it's going to vary depending on a lot of factors, but this is just an example. So even if you join one of my home-based businesses and do the bare minimum, you're still getting these write-offs. And here's another thought, food for thought. If you don't have a home-based business, every morning when you wake up, go over to the window and throw 30 bucks out the window. Do this every day until you realize that you need to get in touch with me to join one of my businesses. Because per this example, that's about what you're wasting. In other words, you're overpaying taxes to the government anywhere from $3,000 to $8,000 per year while you're procrastinating on getting into a home-based business. So stop procrastinating and get into one of my lucrative home-based businesses now. Now, for disclaimer purposes, I'm not a tax accountant. I am just a savvy entrepreneur that doesn't like giving his money to the government. So make sure that you choose the right accountant to do your taxes for you. You know, someone who knows the ins and outs of all of these tax breaks. And by the way, there are a few caveats that apply to this entire series of tax videos that I'm going to do. Number one, you must be working this business with the intent to make a profit, not a hobby. It's got to be a business. You must have, you know, prospect lists, marketing materials, receipts, call logs, whatever you need for your business to show that you're working it for a profit. Now, you don't have to make a profit to take advantage of these benefits, okay? You could be negative, which is a great thing. It offsets your W-2 to income for that year. Very, very, very powerful. The amount of time that you have dedicated to your home-based business is defined as regular and consistent basis. It could be as little as an hour a day, 3 to 5 days a week. So, you know, this is just truly, truly amazing stuff. Now, I want to recommend a book to you. His name is Ron Mueller, and I highly recommend this book. This is where I got the majority of this information. The book is called It's What You Keep That Counts by Ron Mueller. So, you know, go to Amazon, pick up one of those, read it. It's so eye-opening. And again, make sure your accountant knows these things or give him the book too, him or her. This is Bud Gregg. I sincerely hope this has been helpful. And if this has been so eye-opening that you think you need to get started on a home-based business, I've got some fantastic things to talk to you about. So get in touch by all means, and love to hear from you. Bud Gregg from San Diego. Have a beautiful day. We'll see you soon.